Hello, everyone, and welcome to the program Business Points on Global Television. I am Samuel Odi. Many thanks for joining on today's edition of the program. You know, there's a lot of smile on my face just because of one singular reason, because the stock market has been on a bullish trend for the past 6 days, rather, starting from the previous closing. The previous weekend closing the market. So it has been an exciting journey all through. And today again is no different, given the fact that the all-share index closed at a higher momentum, has been closed on a bullish trend. And then let me bring you up to speed with what's happening within Nigerian Stock Exchange. And then the Naira has been on a bearish run for over a few days, which is also sad. But with policies and innovations coming into place, we're hoping to see that the Nigerian Naira will be able to rebound against the pound sterling as well as against the against the US dollar. Well, let me bring you up to speed with what's happening and how the market ended yesterday in the stock market. The Nigerian all-share index ended the trading day of November the 20th with a positive note of a 255.17 points gain, making it the fourth consecutive day of growth and closing at 98,227 points. 0.50 points. This day gains represents a 0.26% increase, underscoring a measured yet steady positive momentum. Trading activities also intensified, with market participants exchanging over 370 million shares in 10,006 transactions, a robust 10.95% jump from the previous day's volume of 333 million shares. Market summary ended yesterday and is opening out today at 98,227.5 points, and then previously it was at 97,747.27 points. The day change is at plus 0.6%. Year-to-date performance is at plus 31.37%. Volume traded was around 370 million shares, and a total deal of 10,026. The trading volume, the Nigerian equity market experienced a surge in activity as daily trading volumes rose by 10.95%, with investors exchanging over 370 million shares, raising up from the former 333 million shares in the previous section. And then the market outlook went further and says the Nigerian liquidity market appears poised for further gains, supported by strong bullish run momentum in the mid and large cap stock market, and sustained rallies fueled by robust investors in sentiment, and encouraging the third quarter earning across sectors are likely to maintain upward momentum and attract broader market participation. You know, looking at the markets now, and despite, we all know that towards this time, a whole lot of sales and trading happened in the market, but we are witnessing, a surge. Despite the inflation, despite the high cost of living, people are still going to the market to get stuff, and then investors are coming. Now, it has been said by different public affairs analysts and as well as business and financial analysts that the policies of President Bola Ahmed Tinubu are actually very, very good on paper, but there's also been a flip side to that, where implementation has always been a challenge. But with those policies being in place now, and some areas of insecurity, and easing off taxation from some sectors, basically the oil and gas, deep oil and gas to be specific, has helped aid to attract more foreign investment. So 2 weeks ago, we witnessed that the markets went on a bearish run where a whole lot of investment pulled out, but now the market is coming back up, and then we've witnessed a significant growth. Just this week alone, there have not been any bearish run in the entire stock exchange. Then the rise actually started from the previous market week, last week, Thursday, when we started witnessing this significant growth and bullish run and bullish trend, rather, in the stock market exchange, in the stock market. So with all of this growth that we're witnessing, we are hoping that the policies and taxation it's going to be eased off a bit so as to get more investment and then more foreign investors, get into the market. Still talking about taxation, moving away from the stock markets now. The Finance Act says will become null and void once reforms with the tax reform bills are being passed or are passed into law. This is coming from the chairman of the Presidential Committee on the Fiscal Policy and Tax Reforms, Mr. Taiwo Oyedele, stated that the Finance Act will become null and void once the tax reform bills are passed into law by the legislative and the executive arms of government. Oyedele provided this clarification while responding to questions related to tax laws during a section with stakeholders for tax consultants and chief financial officers on proposed tax bills, which was virtually monitored by a correspondent. He emphasized that Nigerians should not expect an annual finance act, as the committee has advised the federal government not to introduce the Finance Act in 2024. If you all remember, earlier this year in the month of July, the Nigerian Senate passed the amendment bill to the 2023 Finance Act, which increased the windfall levy on banks for foreign exchange revolutions gains from 50% to around 70% as proposed by President Bola Ahmed Tinubu's administration. The chairman of the Senate Committee on Finance, Senator Sani Musa, read the report of the Committee on Finance before it was finally passed. Senator Musa says that the levy shall be 70% of the released profits from all exchange transactions by banks. Any bank that fails to pay the windfall profit levy to the service has not executed the thereof payment agreement by the 31st of December 2024 shall be liable to pay a windfall levy withheld in addition to a fine of 10% of the levy withheld or not remitted per annum, plus interest at the prevailing Central Bank of Nigeria's minimum discount rates. So looking at all of these angles now, the amendment generated during the discussion and the timing and legality of the proposal, with major tax and advisory bodies weighing into issues. Nigerians have reacted differently to this, particularly because a lot of business owners now and consultants and stakeholders are actually asking about the legality of all of these tax reform bills, given the dire situation Nigerians are facing. Looking at the current inflation rate, food inflation, which is the key driver of the Nigerian inflation. So looking at those angles now, monetary policy is being tightened. Now, a lot of questions are being asked, and some persons are actually advocating to go to court to sort this out because they are trying to look at the legality of all of this. First subsidy being removed, at the same time, new tax bills coming up, and all of these issues is dire to Nigerian communities as well as the Nigerian market, where we've witnessed over time, over the past few months, where businesses are being shut down because they can't keep up with the current trend in that Nigerian economy is currently facing. But still, Nigerians criticize the 50% windfall tax on banks for foreign exchange revolution gains recorded in the year 2023, suggesting it could lead to a legal dispute. And then there are lots of Nigerians that says the policy does not support real active tax. Nigerian express concerns that the unpredictability of the windfall tax applied is already reported its profits for 2023 could discourage investments. So looking at this now, despite all of these issues, Nigerians are wondering, okay, wouldn't these taxations that just keep coming out on a daily basis, almost monthly basis rather, is going to have an effect on investments? Yes, obviously, we've witnessed just a few weeks ago that investors actually pulled out in our from Nigerian Stock Exchange, which caused a certain level of decline. Now the market is rejuvenating and then trying to get back on its feet. So with all of these tax policies now and the windfall taxation being applied for banks and foreign exchange, with all of that now, it's going to just keep making the Nigerian Naira gets weaker, because of the fact that the Naira is being floated. With all these angles now being considered, the prices of things is looking to surge higher. Despite the fact that, we have witnessed a few growth in all of these angles of Nigerian markets. But talking about Nigerian Naira and its floating, we'll be going on a quick break. When we return back, we'll have a bit of conversation around how Nigeria is actually facing a bearish run against the pound sterling. Please do stay with us. We'll be right back. Global television.
The business world can be dynamic and unpredictable, with headwinds and volatility sometimes becoming an obstacle for players in the business and economy landscape. Watch Business Point on Global Television as Samuel Oji walks you through the twists, turns and curves in bonds, stocks and crucial market indices from a global standpoint. Watch Business Point weekdays on Global Television at 11 a.m. West African time. Business Point. This is business.
Yes, many thanks for staying with us. Let's have a conversation for around Nigerian Naira, where it's shrinking around the range of around 2,200 against the British pound sterling. The Nigerian broke through the 2,180 Naira barrier and began its Thursday section, that's today's section, at the lower end of the range against the British pound sterling. The pound was trading at 1,188 Naira on the black market early hours of today, splitted better condition in Nigeria's foreign exchange assets held by the Central Bank of Nigeria. The Nigerian's rapid depreciation against the British pound sterling is in the second half of this year considered, with Nigeria's reserve reaching around 40 billion US dollars monthly, and highest level under President Bola Ahmed Tinubu's leadership. The pressure of the pound on the Nigerian naira remains high, even though the number of Nigerian students studying in the UK has more than half due to the pound's British policy change in terms of reducing mitigation. However, oil weak production, fiscal indiscipline, low export capacity, increased FX hoarding, and speculated activities have all contributed to the fragile state of the country's foreign exchange markets. Consumer price index also facing a bit of a challenge. Data shows that the annual inflation rate rose to 2.3%, exceeding the initial forecast of 2.2% and a 1.7% peak seen in the month of September. The core inflation increased sharply by 0.6% compared to the previous month, surpassing the expected 0.5% increase and following its stability in the month of September. the core CPI, that is the Consumer Price Index, which excluded volatility items such as food, energy, oil, and tobacco, rose by 33.3%, higher than the previous figure of a 2.3%. Economists had expected that the inflation base to the decline of around 3.1%. So the British outlook and the fundamentals of the British pounds remain mixed, with a tilt towards the bearish outlook, giving the Nigerian naira some breathing room at around 2,500 and to a dollar resistance line. The United Kingdom's economic unexpected constraints of a 0.1% in the month of October GDP was revealed significantly impacted the pound. The third quarter economic growth also hindered the British pound's bullish run. The surge in the US dollar began following Donald Trump's victory. Market watchers have evaluated the foreign reserves plan and lower interest rates in the next year. And then we've seen indications that shows that Nigerian naira would be able to rebound against the pound if this prices continues. Then the price action shows that GDP, that's Britain pound / the US dollar, remains exposed with stronger demand for US dollar against risk assessment, and the recent escalation between Russia and Ukraine has also caused an increase in the sale of around 1,000 to 1,264, despite the attempt to stabilize the British currency. Still talking about currency and naira, so we are also going to have a conversation about the dollar to naira, where naira again is actually suffering and then being depreciating. Naira has been on a bullish, rather a bearish trend for the couple of this week beginning. So we're just hoping that that will change. The naira has been depreciated to an unprecedented level in the parallel markets, where the US dollar is now exchanging for a staggering amount of 1,750 naira. This regime milestone underscores the escalating currency crisis plunging Nigeria as Nigerian naira continues its downward slide in the black markets. For many Nigerians, the parallel market often refers to the black market as become the necessary stop for accessing foreign currency. Bureau de change operators, who drives the black market, has been instrumental in settling the daily rates, providing a lifetime for individuals and businesses unable to access foreign currency through conventional banking channels. The disparities between the official rates set by the Central Bank of Nigeria and the black market rates continues to widen. At official rates, the naira currently exchange at 1,688 naira per dollar, making the black market rate a distorting 70 naira higher. This discrepancy illustrates the country's deep roots economic issues and highlights the increasing scarcity of foreign exchange reserves. For today's transaction in the black market, the buying rate for dollar stands at 1,740 naira, while selling rate has hit 1,750 naira. Such volatility, volatility points to the pressure within Nigeria's foreign exchange system, where demand far outpaces the limited supply, leaving the naira in precarious states. Nigeria's economic condition continues to play a critical role in the eradicating fluctuations of the dollar-naira exchange rate in the black market. Speculations within the parallel markets, coupled with government policies on foreign exchange, drives up demand and reinforce a cycle of depreciation for the Nigerian naira, whose value now seems increasingly very, very fragile. These economic challenges have only amplified its recent times, with Nigerian foreign exchange reserve downlining the worrying levels, the shrinking reserves limiting the CBN's ability to support the naira effectively, causing Nigerians to turn increasingly to the parallel market for their foreign exchange need. That is just so sad that the Nigerian naira has been going down ever since it has been floated. But if you go back in time, in the month of September, when an auction was made of over 800 million US dollars by the Central Bank of Nigeria, we witnessed a bit of momentum and then a bit of bullish trend for the Nigerian naira. But at this point, now it has been dipping. Why? Despite the Naira for Crude initiative, we are not seeing the Nigerian naira rebound against these currencies. People have argued, public affairs and business financial analysts mostly have argued the fact that the dollarization of Nigerian economy is a major concern, is a major challenge that is making Nigerian naira not to, stay afloat with other currencies. Pound is around 2,200 to £1 is equivalent to 2,200 naira, and now a dollar is equivalent to 1,750 naira. That's why the food prices and then high cost of living is on a rise, coupled with the current fuel subsidy removal that has been one of the things that Nigerians have been crying and clamoring for a reversal to happen. So with all of these challenges going on within the economy, the president says this is the only route to take to be able to help revamp the economy. On the other note, the CBN governor, Mr. Cardoso, says that tightening the monetary policy is also a way to curb out inflation. On the other hand, NBS and the CPI say the key drivers of inflation is high cost of living, not tightening monetary policies. At this point, Nigerians are just waiting for the best approach so as they would enjoy the dividends of the fact that they have President Bola Ahmed Tinubu as the #1 citizen of Nigeria. Moving away from notes, currency notes, let's have a conversation around digital currency, where cryptocurrency and the leading of them all, which is Bitcoin, is now at sold. Current price is at $97,382.57. That's actually $97,382.57, while Ethereum is being sold currently at $3,121.96 that's in dollars. Solana coin is now averaging around $238, and then BNB coin is around $608, as well as Dogecoin also is at 0.38 dollar, and Thorn coin is at $5.37, while the Bitcoin Cash is at $529.71 and then Percot.coin is around $5. So this is what is happening. Then why is this happening? When the main reason why we tend to see this massive trend in the currency, in the cryptocurrency world, is because of simple and basic facts. When escalating the cryptocurrency value, the most important to consider is the market cap, which represent the total amount invested in the project. A project with a stronger team and innovation ideas may be undervalued even if the price per coin is very low. Now, why Bitcoin keep going higher than every other coin is because of its strong community and then the most that has been invested into it. So with other currencies coming up and then getting more people inclined or involved with what's going on in the market, I think it's going to help the trend, and then people that are looking to invest in all of these currencies will be able to have more reasons to get into the investment for real. And this is how much time will permit us to take, though we'll still be exploring other parts of business in tomorrow, where we'll diving deep into the main reason why the tax reform and the Finance Act would not be implemented. That's why the 2024 Financial Tax Act wouldn't be implemented if this reform tax bills get signed into law. My name is Samuel Odi. I'll see you again tomorrow as we talk more business. Bye for now. Have a great day ahead.